Welcome back. You're tuned into Barsad Morning Call and hope you're having a good morning. Well, to help us out with some fundamental analysis, Dipan Mehta, Director Elixir Equities, joins us on the show. Hi, Dipan. Good morning and good to see you in. We met personally yesterday, but good to have you on the show today. Well, let's talk about the big stock today. That's supposedly Asian Paints because the numbers are weak. Volume growth at around 7%. Most on the street were expecting a number a little better than that. Margins are under pressure, and there's a problem because that it could remain under pressure. And the third factor is valuation-wise not very cheap. But most of these points are known. If the stock pulls back, will you be looking to buy into the dip?
Yeah, Nigel, good morning and thank you for having me on your show, and great meeting with the entire CNBC team yesterday at Chris Wood show. It was really fantastic and quite enlightening. So anyway, coming back to Asian Paints, yeah, I think, this disappointment kind of is getting priced in slowly. And I don't think that Asian Paints or any paint company for that matter is worth buying at this point of time. Even existing investors should be getting a bit nervous looking at ways to exit these companies because of the kind of competition which is coming in. And end of the day, I think base effect also catches up. Overall volume growth in the industry also has now come down to single digit looking at Asian Paints numbers. So it's time to be a little underweight the paint industry. You can factor in a lot of positives on a longer term basis, but I think next few quarters are going to be very challenging.
Okay, next few quarters are going to be very challenging. Well, Dipan, hi, good morning. I wanted your thoughts on Polycab because it comes out numbers today. And this has been one stock that has been a favorite of the market, right? Expected to report strong numbers on the top line, but margins could be under pressure. Would you buy Polycab ahead of the numbers? Are you still bullish on it? How are you approaching it?
Good morning, Sonia. No, I think the stock is very expensive and there are better plays in that particular segment. We actually prefer KEI or even Apar Industries where performance has been more consistent and more diversified range as well. Polycab has been trying to extend into appliance business, what they call the FMEG business, but that's not been very successful. And no doubt it has a very dominant position in the cable industry, a very strong brand. But considering the valuations, I'm not sure the risk return favors buying the stock at these levels.
Dipan, it's something which comes up before every election, every budget. What is your sense, Dipan? 3 days to go for the budget.
Yeah, Prashant, good morning. I think he made that point that was a risk factor for the market, but I'll let you know a little secret because after the town hall was over, we asked him questions about the liquidity flows coming into the market, and that he said is something which the government is seriously looking at, and banks are finding it extremely challenging to raise deposits because savings are being channelized into equity markets. So this capital gains is all the more important this time around because if they do some tinkering in such a way that bank deposits become more, I would say, favorable or more attractive, then that certainly, could move or shift some amount of flows into bank deposits and the loss of equity or mutual funds for that matter. So let's see what happens. I think, government also wants a buoyant capital market, but there are challenges on the bank deposit sides and, you could expect that there could be some tinkering with capital gains. But in my opinion, I think those will be temporary. End of the day, I think, earnings will drive the growth. And right now, maybe market is a bit ahead of its earnings curve. But at some point of time, it will find equilibrium.
Okay. Well, two big earnings coming out today and tomorrow, right? Infosys and Reliance. What would your pick be? Or you can choose both also.
Yeah, I think it's time to get more and more overweight into large caps, even including large cap IT companies as well. So far, whatever has come through from mid cap IT companies, it does appear that now I think the growth rates are more or less similar in line. And of course, there's more comfort in large cap because of diversity of revenue. So I would go with that. Reliance Industries, I think the way the stock price has been moving up, a lot of positives have got factored in. And end of the day, I think it's all about unlocking the value, whether there will be a split in the company or the IPO. I think a lot of brokerage is now getting highly focused just on that because that could make a difference of almost 100 to 200 rupees in the stock price, assuming that Reliance becomes a holding company or not. So these are, I think, the kind of issues playing on the investor's mind. By and large, I think businesses are pretty mature and well discovered. So the only trigger left in the Reliance stock price, up move or down move, is how they're going to unlock the value.
All right, Dipan, I want to quickly ask you about the two-wheeler preference out there. Bajaj Auto, those margins have looked good, and the company as well has been sounding optimistic about the outlook on exports. Well, the Royal Enfield has come out with a new bike, from their staple. What do you prefer from the two-wheeler space?
No, I think that two-wheelers are going to have a great season. Monsoons are good, so rural play is going to come into focus. And also, I think after a long time, they are seeing a cyclical upswing. At the same time, raw material prices also are pretty much under control. A lot of new models have done exceptionally well as well. So I think that across the board, Hero MotoCorp, Bajaj Auto, Eicher, all should do extremely well. Bajaj Auto especially has really surprised on the earnings last 2-3 quarters or so, and this quarter numbers also are quite impressive. Eicher Motors very disappointed with its growth numbers, but look, the margins and the profitability has been coming through. So I would say that it's time to get a little overweight on the two-wheeler companies, but look, keep an eye out for this EV kind of disruption taking place, and that has long-term implications for the two-wheeler industry. So right now, I think we're in a good trading rally for two-wheeler stocks because of good quarterly earnings. But I wouldn't be far too overweight in the two-wheeler companies, considering that there's a major disruption coming through in the form of EVs.